Hello and welcome. We're just verifying the audio and we're about to get started. Sounds like it's working. Thank you so much for joining. Just verifying that it's on another stream as well. We had difficulties yesterday. All right, looks like we're ready to go. So welcome to your daily Solo 401k webinar and Q&A session with my Solo 401k Financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic, the ultimate free money stack, mega backdoor Roth plus IRA match plus $1,500 in solo 401k tax credits. This is your chance to get answers. Please use the chat to ask questions on today's topic or anything else. Chat them over now so that we can be sure to get to them all. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So I see we got one question that was teed up. We'll just knock that one out before we jump in. Can you please outline the process for taking a loan for my solo 401k? Please highlight any documentation that needs to occur and direct us to any templates that you may have. So it looks like follow up here is what happens if you pay back a solo 401k loan early? Will you still owe interest that was originally projected, or does it adjust like paying off a fixed mortgage early? So we have an online process that customers use to let us know that they want to take a loan. That prompts us to prepare the loan documents, which you do within one business day. So that is where the customer is going to choose where do they want to have the account at in terms of not where they want to have the account at, but the details of the loan. For example, is it a $50,000 loan or a $10,000 loan? And then the payment terms, do they want it to be monthly payments or quarterly payments? So based on the answer, we prepare the documents to create or to document the loan within one business day. And then it's up to the client to pay back the loan according to the payment terms. And I grabbed your email here. I was doing that while I was speaking. So I'll send over a link to the loan questionnaire, and there's a lot of FAQs and everything on there as well. So we'll get you more information after the webinar. As far as your follow-up question here, if you pay back the loan early, no, the interest that had not accumulated yet according to that payment schedule won't be due. So you'll end up paying less over, in sum that you would have paid if you had just paid it according to the schedule. You can prepay early. There's no prepayment penalty. And so that's definitely an option if you choose to do so. Hopefully that helps. Thank you so much for the good questions. One more question before we get started. What's the difference between doing a bank account versus a brokerage account? How would that impact my ability to buy gold bullion? Which is better for buying gold bullion? Do you guide at all on the process of buying gold bullion with the account? Yeah, yes, we do. We have a very robust procedure section of our website. Most clients are going to buy the gold bullion from a bank account, but keep in mind, you can have both a bank account and a brokerage account. So that's no problem if you want to diversify, half bullion, half ETFs. So of course, you would need to have a brokerage account in order to be able to invest in a gold focused ETF. So you fund the account by either rolling money over from a pre-existing retirement account, like a former employer plan or a non-Roth IRA, or by making contributions. The contributions are going to be subject to the contribution limits. You have to have this earned self-employment income to justify the contribution, but you can transfer the money to make that contribution from a personal account or a business account. If you want your spouse to be able to participate in the plan, that's certainly also possible. Your spouse would just need to be working in the business and reporting the spouse's own earned self-employment income. In that case, the spouse would have their own separate accounts, etc. The spouse's ability to contribute will be based on the spouse's situation, like their age, their earned self-employment income, etc. So hopefully that helps. Great questions. If there are more questions as we go through the slides, don't hesitate to chat those over now so we can be sure to get to them, whether on this topic at hand or on other topics. Now we want to spend some time just going through the slides around the ultimate free money stack, which includes number one, the Mega Backdoor Roth, number two, IRA Match programs that are out there, and the $1,500 in solo 401k tax credits that one is eligible for by setting up our solo 401k plan. But before we get into those details, let's first lay the foundation around the basics, which is, okay, what is a solo 401k? Who's eligible to set up a solo 401k? A solo 401k is a retirement plan that's available to self-employed individuals. Now, you need to be self-employed, including reporting your own earned self-employment income with no non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. Some of the top eligibility considerations include whether or not you need to have a separate entity. The answer is no. We have many, many customers, for example, who operate as sole proprietors, and that's fine. Ultimately, the key is that you're reporting earned self-employment income on your taxes. So that would be, for example, income reported on Schedule C if your business is taxed as a sole proprietorship, or it could be a single member LLC taxed as a sole proprietorship. In the case of a business taxed as an S Corp or a C Corp, that would include W-2 wages from the business taxed as an S Corp or a C Corp. And lastly, if the business is taxed as a partnership, earned self-employment income is income reported on line 14 of the K-1 from the partnership. Now, to one of the good questions, can a spouse or business partner participate? The answer is yes. The spouse or business partner would need to be working in the business and reporting the spouse's own earned self-employment income. The spouse doesn't need to be an owner. The business partner would. That's what a business partner means. That means they're an owner. They need to own at least 3%. But in either case, the individual, again, would need to have their own earned self-employment income, like the spouse's own separate Schedule C or a separate W-2 for the spouse. For example, if the business is taxed as an S Corp or a C Corp. Additional eligibility considerations are around whether the person has a day job. So the fact that the person has a day job, even if they participate in their day job employer plan, is not going to preclude or prevent that person from being able to set up a separate solo 401k as long as they have separate earned self-employment income with no W-2 employees, no full-time, non-owner, non-spouse W-2 employees working for any business owned by that person or a spouse, if any. So that's the basics. Let's talk about why stacking these strategies means. We're going to go through the different parts of the stack, right? The Mega Backdoor Roth, the IRA Match programs, and the $1,500 in solo 401k tax credits. So why stack? Well, just more free money. So what do we mean by free money? Well, there's different ways to view that. So in the context of a Roth or a Mega Backdoor Roth, this is a way to accumulate a relatively high amount of funds in a Roth account. For example, for 2025, up to $70,000, which is 10 times the Roth IRA contribution limit. And that's tax-free. So that's one way to interpret free money, is that you have the potential for tax-free growth once it's in that Roth account. An additional part of the stack are these Roth IRA match programs that are out there through different companies. For example, Robinhood. So if you roll over money, Robinhood currently, when we're doing this webinar, they have a program where if you roll over money to your Roth IRA at Robinhood, they will match that, quote unquote, match it. So it's essentially encouraging you to deposit money at Robinhood. So they'll put additional money into that account. Now, of course, we'll talk about the details, but that would be another way to obtain, quote unquote, free money for your retirement account. Lastly, the tax credits. This is real cash savings in the sense that setting up our plan will make the self-employed individual eligible to claim tax credits. These are not tax deductions, these are tax credits. So it's a dollar for dollar reduction in your tax liability. So now let's start to put some more meat on the bones, give more detail around each part of the stack. So we'll first go through the Mega Backdoor Roth. So Mega Backdoor Roth is a marketing term or an industry term. It's essentially a strategy where one is able to contribute a much higher amount where the funds end up in a Roth account. It could be a Roth 401k or a Roth IRA. So in order to be eligible to make Mega Backdoor Roth contributions, you would need to be eligible to set up a solo 401k plan that includes the features that allow you to make mega backdoor Roth contributions. So that means that you're, first of all, self-employed with no full-time W-2 employees. That's what enables someone to set up a solo 401k. But they can't just set up any type of solo 401k. Can't just be a basic solo 401k like the ones offered by the discount brokerages like Fidelity and Schwab. You need to have a special type of solo 401k, like the one offered by my solo 401k Financial, that supports mega backdoor Roth contributions. So what is a mega backdoor Roth contribution? Well, there's two components. There's two steps. You first have to make a voluntary after-tax contribution. So that means that the plan needs to allow you to make voluntary after-tax contributions. And then you convert the money from the voluntary after-tax account either to a Roth 401k or a Roth IRA. So again, the plan documents need to allow for that in-plan conversion. And our plan does. That's one of the top reasons the customers sign up with us, is the ability to make those mega backdoor Roth contributions. All right, let's go to the second part of the stack, which is the IRA Match program. So I mentioned Robinhood, but that's not the only one. If you do research, you can see that there's other providers out there that are offering Roth IRAs, where if you roll over money to the Roth IRA, they'll give you a promotional deposit, what they refer to as a match. Now, of course, you want to understand the details, right? There could be holding periods, for example, up to 5 years, right? You might need to subscribe to their services. And then if you cancel or you withdraw, then they could claw back that match, right? Or there might be caps, right? It might not be unlimited. Some of them appear to be unlimited, but there might be some that are limited in terms of how much you roll over and what would be eligible for that 1% match. So if you take those first two already, remember I talked about how if you have a plan like ours that allows for mega backdoor Roth contributions, you could contribute up to $70,000 as a voluntary after-tax contribution, assuming you got the self-employment income to justify it. So you can contribute 100% of your self-employment income dollar for dollar up to $70,000 for 2025 as a voluntary after-tax contribution, and then transfer the money out of the plan to a Roth IRA. So if you transfer it out of the plan to a Roth IRA at one of these providers that's offering the match, like Robinhood, then that rollover amount, the $70,000, would be matched at 1%. So that's $700 that it would be matched. Now, again, understand the details, the requirements, the holding periods, etc. So now let's go to the third part of the stack, which is the tax credits. So under the Secure Act, a new type of credit was established under the law by Congress as part of the Secure Act that encourages businesses to set up 401k plans. Now, this is not the only tax credit that was authorized under the Secure Act. There's also the startup cost credit. But a solo 401k plan, a one participant plan, an owner-only plan is not eligible for the startup cost credits. But there's another credit that was authorized under the Secure Act, which is a credit for having a plan that includes an auto-enrollment feature. So if you have a plan, if you're self-employed, you're eligible to set up a solo 401k, and you set up a plan like the one offered by my solo 401k Financial that includes that auto-enrollment feature, now the self-employed business is going to be eligible to start claiming the credits. So those credits are $500 per year for 3 consecutive years. So that's $1,500. These plans are not, this credit is not available if you set up a basic plan at a discount brokerage. Those plans that are offered by those discount brokerages like Fidelity and Schwab don't include the features, don't include the notices that are required to make the self-employed business eligible to claim the credits, but our plan is. So keep in mind, this is for not only new solo 401k plans, but even existing plans that are upgraded to our plan to add the auto-enrollment feature. It's also noteworthy that that auto-enrollment feature will set a default 3% contribution percentage, but the solo 401k owner, as the participant in the plan, has the right to opt out of the default. And opting out of the default doesn't mean that the plan doesn't have the feature, it just means that the individual, the solo 401k owner, as the participant, exercise their right to opt out of the default. So opting out of the default doesn't mean that the self-employed business is not eligible to claim the credit. It still would be. eligible to claim those credits. So that's just more free money, right? This is going to offset your taxes. It's a dollar for dollar reduction in your tax liability. It's going to offset the costs effectively of setting up the plan. For example, for our plan, these $1,500 in solo 401k tax credits more than covers our fees for the first 7 years. We charge $650. That's the initial fee that includes the $525 establishment fee plus the first $125 annual fee. Then starting 12 months later, we charge our $125 annual fee, totally flat, covers multiple persons, like two spouses who are both working in the business, both reporting their own earned self-employment income. It doesn't go up if the value of the plan goes up. It doesn't go up if you need additional compliance support for the 401k, like the 5500 DZ or the 1099R or loan documents, etc. So you know exactly what you're signing up for, and the credit is going to more than offset our fees for the first 7 years. All right, so stacking it all together, if you're eligible, right, you're self-employed with no non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any, you could set up our solo 401k plan, which is going to allow you to make mega backdoor Roth contributions. You can make those voluntary after-tax contributions, 100% of your self-employment compensation, dollar for dollar, to a separate voluntary after-tax account. You could then transfer the money out of the voluntary after-tax account over to a Roth IRA, like a Roth IRA that includes a matching program like Robinhood with their 1% match, and then also be able to claim the $1,500 in solo 401k tax credits. So this can have an impact of potentially thousands in extra free money. So we've got a quick example to paint the picture. You have a solopreneur earning $120,000. They make the $70,000 voluntary after-tax contribution, convert to the Robinhood 1% match, receive $700, claim the $1,500 credit. They also have this potential for tax-free growth of the money that's in their Roth IRA as well. So again, potential to save thousands. All right, well, that takes us to the end of the slides. Thank you so much for checking out today's session. We certainly do appreciate that. If the information is helping you feel more confident about your future, please take 1 second to like and subscribe. It tells the platform that this content is valuable, which helps other solopreneurs like you find it. Subscribing guarantees you get notifications of all of our crucial content that we deliver every day to help you secure your retirement. So if there are questions on this topic or other topic, please go ahead and chat those over now. We do have a little bit more time. In the meantime, we want to invite you to our community. We have the largest community of self-directed investors, solopreneurs around these topics. Over 30,000 members. It's a vibrant community. You can see we've got forums, active forums on there. We have a catalog, a library of videos and webinars. So there's lots of ways to learn, lots of ways to share the knowledge. You can join easily at mysolo401k.net/my community. It's totally free to join. All are welcome. It's not just for clients. So please don't hesitate to join if you are interested. All right, I don't see any more questions. Again, please like the video, please subscribe. Thank you so much for the engagement. That's it for today's Solo 401k session. Thank you so much for investing your time with us. Your time is valuable. Your retirement future is worth it. If you haven't yet, again, please like and subscribe so we can keep building this community. We'll be back here tomorrow with more crucial content to help you secure your retirement. I see we got one more question coming in, so we'll give it a moment. What's the interest rate on the loan? It's prime plus 1%, or it could be a CD rate plus 2%. So that'd be a comparable CD. So if someone's taking a $50,000 loan, 5-year term, you could take the average of a number of $50,000 5-year CDs plus 2%. Give us that interest rate, and then we would use it to draft the loan documents. Regarding my solo 401k fund sitting in bank that I'd like to invest in corporate bonds paying monthly dividends, do I need to roll it out to a self-directed IRA in order to invest? So great question. The plan would certainly allow for investing in bonds. Now, the details will depend on what type of account you need to invest in the specific bonds. And this is assuming that it's just a passive investment, right? It's not bonds that are issued by, for example, your own company, just to give an example of an investment that would not be allowed. But assuming it passes that test, just practically speaking, it's going to depend on where you need to have an account at to invest in those bonds, right? Some bonds you can invest in through a brokerage account, like a Fidelity or Schwab, in which case, if you have a brokerage account under the name of your solo 401k, you could just transfer the funds to that account and invest in the bonds. If it's something else, like let's say it's more in the nature of a private offering, then you could just transfer the funds directly from the bank account. Of course, you want to make sure that the investment is documented under the name and EIN number of the plan, but it would not entail transferring the funds out of the plan to an IRA in order to invest. It's just a matter of making sure that the investment is done either through an account in the name of the solo 401k or otherwise documented in the name of the solo 401k and under the EIN number of the solo 401k, so that to the extent that there's any tax reporting done to the bond holders, that tax reporting is done under the EIN number of the plan, so that the IRS understands that the money is growing inside of a retirement account. All right, thanks so much, everyone. All the best.